Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan. With us is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
You know, last week we had so much to talk about, but the shortened holiday week certainly has shut down some of the topics and markets a little bit as well. Let's start first and talk a little bit about what happened this week in a short trading week on the markets.
Yeah, so if we look at where markets have been, again, it has been a very slow week. On the future side, we were higher on cattle prices for this week. We were also higher on hog prices for the week. So it seems like folks in Chicago dismissed the hogs and pigs report pretty quickly, and we got some recovery as we went through the week. When you look at the wholesale side of things, so number one, we've had box beef prices, choice box beef prices, back above $2. We haven't probably seen that since August of this year. So wholesale prices continue to rise. We were also up another dollar or so on pork cutout value. So it looks like the demand side's been reasonable this week, although again, very short week for us.
Are we surprised to see the market digest and rebound as quick as it did on that hogs and pigs report with the surprise that the report itself had?
Yeah, I think I am surprised that we got quite the turnaround. Again, we know we have more processing capacity coming on board in 2017, but when you look at especially those lower weight groups of market hog inventories at plus 4%, it tells us we've got a lot of hogs to deal with in 2017, and not only more hogs, but then more pork ultimately. And what we can move that pork at, I think we'll continue to watch carefully as we move into 2017. But again, that shortened week, we'll see what happens when we get back here after the first of the year in terms of where hog prices head on the Chicago Mercantile Exchange.
The fact that it's been a pretty slow trading week gives us an opportunity to really look ahead and maybe start thinking again and talking about risk management in 2017. And maybe looking at some of the things that could impact profitability or break evens. Let's start first and talk about the risk management strategy. What do producers need to be thinking about and really maybe start paying attention to a little bit more as we get closer to the new year?
Yeah, so I think we can look at both sides of the equation here just a little bit, Megan, in terms of risk management. I like to look back at cattle and hog prices and remind us that we've almost recovered all of the decline that we would have seen from August through October of this year in cattle and hog markets as we went from early October here to the end of the year. So that recovery now changes, in my mind, what folks should be thinking about. The last thing we want to be doing is locking in on risk management when we're at those lows. But now that we've got some nice recovery, I would continue to say maybe there's more downside risk in those markets now. None of us know exactly the future of where these livestock prices head, but I worry there's more downside risk right now given some of the recovery that we've had. And I say that because I think some of the fundamentals that we've continued to talk about remain in place. When I look at overall U.S. meat production in 2017, I think we're going to get more beef production. I think we're going to get more pork production. And I think we're going to get more chicken production to the tune of about 3 billion pounds of additional product in those three categories. Well, how do we move that product? So, that domestic demand and international demand will be important, but just to remind ourselves that supply side has not gone away in terms of growth is important. And maybe now's the time to think about locking in, however you can, a portion of that risk. And I often think longer term. This is not talking about just 60 days, but if I'm a cow-calf producer and I'm thinking about selling calves the fall of 2017, is there anything I can do today to reduce my risk? And maybe that's an opportunity they should be thinking about.
I would also think we've got to start thinking a little bit more about inputs. And as we look ahead to 2017, obviously we'll be watching for that prospective planting report to see what happens here in the U.S. and corn and soybean acres. But you can't forget South America and its prime growing season and in that part of the world.
Absolutely. So I look on the crop side and go, there's risk there. frankly, risk in both directions. Maybe crop producers don't want to talk about downside risk given where prices are, but could be in either direction. But that South American crop's going to be very important. We already saw a little bit of weather scare in South America move us higher on futures prices early this week. We've kind of retraced from that those higher prices as we move through the week this week. But I think as you look at 2017, yeah, we're going to be focused on that South America crop, number one. And then right away, where are corn and soybean prices, and what do we think relative acreage in this country is going to do, corn versus soybeans, and prospective plantings will be on us before we can really blink an eye here in 2017. And then, of course, weather scares. As you remember in 2016, as we went through early June and it got dry in a lot of corn and soybean area in this country, we moved prices pretty quickly. So livestock producers on the flip side need to think about how they want to reduce the risk from higher feed prices that could come along. And you don't want to be lulled into that false sense of security just because prices are low today that they're going to remain low forever. Because in many cases, when you look at where corn prices in particular are at, I think a lot of corn producers would tell you those are below cost of production today.
You know, Scott, when you think about South America, you mentioned a weather scare. What they were projected, we were projected to go from a strong El Nino to a strong La Nina, and things kind of mellowed out a little bit. And they've gotten rains in Argentina and Brazil, and it's providing a boost to that crop. Does that maybe present our livestock producers here in the U.S. with an opportunity to lower some of their input cost as well?
Yeah, so I think potentially it does. So I might look short term and say we have a little bit of downside pressure on those prices if that South American crop ends up where most are expecting it to be today. Again, I would like to remind folks when we're doing risk management, trying to pick the low in the case of feed inputs is very difficult to do, just as predicting the high in meat prices is difficult. I always tell producers, number one, can you lock in both sides of that equation and make it some black ink for yourself? And if so, then do I want to reduce that risk by locking in? I think it's important to understand where your costs are as you think through that whole process of risk management.
We don't talk a ton about poultry, but I think one of the things we need to touch on a little bit this week, the outbreaks of highly pathogenic avian influenza in Europe and Asia continue to grow. South Korea has been hit exceptionally hard. As we look at those markets and the fact that they're losing so much of their supply, does that present maybe a small opportunity for U.S. poultry producers to maybe take advantage of market opportunities?
Yeah, so I think right now when you look at the situation, yes, we're seeing more cases occur, particularly I focus on Asia here, Japan, South Korea, both have talked about some fairly large depopulation of chickens trying to deal with HPAI in those countries in the world. So I look at those, and on the demand side, you look at per capita consumption in both South Korea and Japan of somewhere a little north of 25 pounds per person. So yeah, that probably does present some opportunities for us. We have not seen U.S. exports of poultry in places like Korea be a very large portion of what we export. At best, 5% of our exports historically would have gone to South Korea. So I don't want to overstate the possibility, but it does tighten those markets up a little bit for us and maybe give us some opportunity. I take the flip side for a minute and go, it's important for us to realize that right now is when we've seen some AI outbreaks in the past. So we'll have to watch as we look ahead in 2017 to make sure we don't have our own issues, because that will shut down markets that are important to us, to those regions of the U.S. that might have an AI outbreak.
What about the egg side of things, Scott? I mean, we are looking at egg prices now that are insane. I would just assume by the fact that we have eggs so cheap that we have a massive supply of eggs. Does it present an opportunity for that market?
Perhaps it does. I think when you look again in a place like South Korea, I've seen some reports now that egg prices have more than doubled in South Korea. So maybe there's an opportunity for us to move what are some incredibly low egg prices in this country as we maybe can move some eggs, but we don't tend to trade a lot in the egg market. So I think there's limited opportunities there. So we'll have to wait and see. But egg markets certainly have seen much larger swings. You can even look in our own U.S. case back in 2015, where we had extremely high egg prices, $2, $3 a dozen at some points. And today, I think you could find plenty of eggs south of 50 cents a dozen. It's amazing what a few years, a few months have done on the egg side of the situation. And I think the same thing for what we're seeing in South Korea and Japan as well. If they can get those AI outbreaks under control, egg prices might come down fairly quickly as well for them.
My holiday baking has never been as cheap as it was this year. Scott, as we look ahead to the month of January, I will see you at the Heart of America Dairy Expo here in a couple of weeks in Springfield, Missouri. So you can check us out there as well. But at the end of the month, the cattle inventory report. As we look at that report, why are we paying attention to it, and what numbers and what figures are we looking for with it?
Yeah, so a really good question, Megan. So first of all, I remind us that USDA did not do a July cattle inventory report, July of 2016. And so we have not seen any information from USDA on the number of cows, overall cattle herd since January of 2016. And I'm curious as to where we end up with beef cow inventories when we get the report from USDA right at the end of January of next year. I've talked to a lot of producers across the country, some of them who will admit they have higher inventories of cows today than they had a year ago. Others who will argue with me that there are a lot less cows out there today than where we started 2016. Getting a sense of where that beef cow herd is, I think, is very important for beef markets as we look ahead. I expect we're going to be up when we get the report from USDA, but not the same kind of growth we saw from 15 to 16. But I don't think we'll be down. If we got a lower beef cow herd already by January 1 of 2017, that's probably some really good news for the cattle industry as we look ahead for the remainder of 2017. But that's a big report. In fact, we haven't had any good information in terms of reports from USDA since January of 2016. That's why that report's very critical in my mind for setting the stage for cattle markets in late 2017, early 2018.
Scott, anything else this week?
I think we've covered a majority of what's been happening. Again, a very short week in terms of information, and I'll look forward to see where markets move as we get into the first week of January.
As always, if you have questions for Scott and myself, go to our website, brownfieldagnews.com. We have a link up there where you can submit your question, and we'll answer it for you each Friday, or answer questions for you each Friday. You can also subscribe to have our weekly livestock market update delivered directly to your email box every Saturday morning, brownfieldagnews.com. Have a great weekend from Shannon, Scott, and myself, and have a very happy new year. I'm Meghan Grebner on Brownfield.